Sarah, a tutor here at Accountancy Learning, and in this video I'll take you through the AAT Level 3 Financial Accounts Sample Paper 2, Task 2. So this task is about recording period end adjustments. You work at an accounting practice working on several different client accounts. Your manager approaches you and tells you that she needs the prepaid expenses finalised before the end of the day for a specific client. If that is not possible, then you should just leave them out completely. Identify which one of the following is a potential consequence of complying with your manager's request. So the manager is asking you that if the expenses cannot be done before the end of the day, then they shouldn't be done at all. They should just be left out. So remember that prepaid expenses reduce the cost to a business in a given period. So we prepay our expense. So say, for example, insurance runs from a particular date to an end date, and we will prepay any part of that time frame that doesn't sit within the year end that we're doing. So if the prepaid expenses are not done, if we don't prepay those costs, it means the full cost of, say, that insurance policy is sitting in that year-end figure. So that will increase the cost to the business, and therefore it would mean that our profit would be lower. So with the options that we are given here, we're going to be looking for one that tells us that profit is going to be lower, so understated. So the two that we are going to be picking from is these two here. Profit will be understated. And then we've got to choose something about either liabilities or assets. Now, our prepaid expenses are an asset to the business. They are classed as assets. So if we haven't put the prepaid expenses through, it means that our assets are going to be understated, which could then lead to incorrect decisions being made. So our answer is the third option. Profit will be understated and assets will be understated, leading to incorrect decisions being made. The next part of this task, the financial year ends on the 30th of June 20x8, and now we've got to complete the following statements. Any adjustments for prepaid expenses that are made should be dated. So if we're doing our prepaid expenses, we're doing our final year-end adjustments, it's going to be on our year-end date. So it's going to be on the 30th of June. In the exam, you can click on this little calendar to select your date. The reversal of these adjustments for prepaid expenses should be dated. So when we're going to reverse them is then going to be in the next financial year. So our year end is the 30th of June. So our next financial year will start on the 1st of July, and that's when we'll do all of our reversing entries. You receive an email from another client including the following. The invoice we sent to JS Limited, one of our customers, should be paid at the start of the next financial year, but I have a feeling they might not be able to pay. So we've got customers that might not be able to pay. So we need to identify the course of action that we should take. So because the invoice has been raised in the financial year that we're working on, regardless of when it should be paid, so it should be paid next year, but they're telling us that they might not be able to pay. So because this is a likely situation that might happen in the future, we need to make sure that that's a provision in the current year so that it then becomes effectively an expense to the business in the current year. We shouldn't leave it until next year, but also importantly, we shouldn't write off the debt immediately. It doesn't meet the criteria yet for an irrecoverable debt. So looking at the options then, write off the debt irrecoverable. So as I've just said, we can't do that because it doesn't yet meet all the irrecoverable debt criteria. Set up a specific allowance for doubtful receivables. So yes, that is what we're going to need to do. We need to put a provision into the account. So we need an allowance in the account, and this is for a specific customer. We're not talking about percentage of trade receivables. We're talking about a specific customer. So we're going to put in that allowance for doubtful receivables. The final two, do nothing until next year. We need to do it, and as we know about it in this financial year, we need to deal with it in this financial year. Or take the amount out of the general allowance for doubtful receivables. This needs to be a specific allowance put in. You are now working on the accounts of Angela Deering, a sole trader for the year ended the 30th of June 20x8. You are considering the administration expenses account. The cash book figure is £35,750. This includes £800 electricity, which was related to May and June 20x7. An adjustment relating to this was made in the year ending the 30th of June 20x7, but the corresponding entry has yet to be made in the current year. An invoice for insurance has been included for £4,500 regarding the 12 months from the 1st of February 20x8. So now we need to complete the administrative expenses account for the year ending the 30th of June 20x8 and ensure it's balanced off appropriately. We also need to make sure we enter to 2 decimal places. So there's a lot of information in here. So first of all, we are going to be looking at our cash book figure. So it's the first thing that we're given here is our cash book figure. So this is the amount of money that's been paid out on administration expenses. So we are going to put in cash book, and it's going to be a debit because it's going to be a credit in the cash book, and so it's coming out the bank. We've paid the money out, so it's going to be a debit to increase our administrative expenses. In the exam, you will click on these boxes to get the drop down, so you won't have to type this in. You can choose it from a list. So we're going to put the full amount from the cash book as a debit into our administrative expenses accounts. Now let's deal with the first bullet point. £800 electricity related to May and June. An adjustment related to this was made in the year ending the 30th of June 20x7. Corresponding entry has yet to be made. So that was going to be for our accruals for the year. So these months here to the year end 30th of June. So we hadn't had a bill in for those, so we had to accrue for them. Oops. So now we're going to have paid them in the new year, so we need to reverse them out. So we are going to have the expenses reversal. Again, you'll choose from the drop down. And we're going to have £800. So remember, we need to do 2 decimal places, which I haven't done here. So let me pop that in as well. So that is going to be reversed out because that has been accrued for the last year, will have now been paid and sorted in this year. So we then need to net that off. So that £800 is reversed. An invoice for insurance had been included for £4,500 regarding the 12 months from the 1st of February 20x8. So we got £4,500, 12 months from the 1st of February. So February to our June year end is 5 months. So we only want 5 months of that cost in the current financial year. The rest of it, so from July to January, we want to prepay so it sits in next year's accounts. So to work that out, we're going to want to prepay 7 months So we'll divide it by 12 and times it by 7, which gives us a figure of 2,625. And that's our prepaid expenses. We put it on the credit side because it's reducing our expenses, and then the opposite side would be in the prepaid expenses account as a debit, which would be an asset to the business. Now, it's worth noting that in the exam, these figures at the bottom will auto sum. So as you're entering in your figures, they will auto sum. Our next bit then is we need to make sure we balance off appropriately. So now, because it's a year end, we need to do a transfer to our statement of profit or loss. So we will balance it off in the usual way to get our transfer figure of £32,325. And then in the exam, you should see that these two figures balance. Your final task for the day is to work on the final accounts for AJ, a sole trader who runs a sweet shop. Alongside the sweets, he sells hand-decorated sweet jars, and he's considering his inventory. It's his policy to sell any sweets which he does not consider perfect at 50% of their normal selling price. Each packet of sweets retails for £2.50, and they cost £1.75 per packet to manufacture. He currently has 87 packets of sweets, but a box containing 15 packets was dropped and they were damaged. What is the total inventory value which should be included in the accounts with regards to AR sweets? And we need to show our answers to the nearest penny. So for this then, we need to be lower of cost or net realisable value. And we need to treat the good stock and the damaged stock separately. So for our good stock, we are going to say our cost is 175, and for good stock, that would be our net realisable value, how much we're selling it for. So our good stock is going to be the lower of those, so 175. We have 87, but 15 of those were damaged, which means we have 72 good, times 175 by 72 to give 126. Now the damaged ones still would have cost 175, but now their net realisable value is only 50% of the selling price. So our net realisable value is 125. So for our damaged goods, we have to take our NRV, 125 by 15, 1875, and then we add these two together to get 144.75. So remember, when you've got good and damaged, you need to add them together. Then finally, the jars retail for £20 each and cost £10 each. 3 jars are damaged and will cost £40 to repair. They will then be offered for sale at a 10% discount. What is the total inventory value which should be included in the accounts with regards to these 3 jars? Show your answer to the nearest penny. So that to repair the 3 jars, it's going to be £40 total, not per jar, total. So first of all, we know that they're going to be sold at a 10% discount. So they're only going to be sold at 90% of the £20 selling price, £18, which for 3 jars would be a total of 54. but we've got costs to repair of 40, which equals 14. So again, this is then now going to be our net realisable value. So how much can we actually make from these, which we've got to include our cost to repair. And then that is then lower than what they actually cost, because it would be 10 by 3 is 30. So we've got cost at £30 for 3 jars, or £14 net realisable value for 3 jars. And the key with this question is that you make sure you're talking about them as a full cost of £40 total rather than per jar. That brings us to the end of task 2.